Welcome to Trading Lounge and the European Indices report, and starting with the stock 50 here, and this is the basic pattern that we're looking at for the US and for the European markets. Now, currently from this high here, we're looking down for an A wave, a B wave and a C wave in 5 waves, which should be complete now. And then looking for a move up as wave 1, 2 and 3, 4, 5 and so on. Now the situation here is that we really need to, before we can start to trade long in equities, then we need to get some evidence that the market is moving up. So this wave 1 here would need to produce 5 waves, and that would create the setup for wave 2 and then trading into wave 3. The other thing that we need to be mindful here is that in this process coming down here, yes, we can label as an A and a B and a C wave, and that's fine. But if this trend gets larger, and that means it has another move up to this point and then another move down here, then what that will do is that will give us 5 waves down here. And if we've got 5 waves down in the opposite direction from this high here, then we'd be looking at an A and a B and a C wave here, and then further down here. Okay, so it's quite sort of critical what occurs here, and this is what we've been talking about with the US markets as well. So with that in mind, let's have a look at the DAX. And we'll look at the DAX on the daily chart, and we'll have a look at the positive and the negative side of this. Now, first of all, the current move up through here comes into the 50-60% retracement area here at quite a large number, 11,000, but I consider 11,500 to play a stronger part, odd as that is. But that being at the 50-60% retracement level there, if it was going to fail, well then this is the first place that it would fail from, and this would be the second place that it would fail from. It just we're looking at it as a wave 4, and we know wave 4s can get a bit complicated. However, we've got 3 waves down so far, and that appears to be the corrective pattern, and we'll drill into that in a moment. But on the more bearish side of things, that it is possible to count this up here as 3 waves. So it's quite possible that this can be a B wave here. In fact, it wouldn't be that degree of B wave. It would actually be this one here. So, and then looking for a larger C wave over here. So it's quite critical what actually occurs in this little section here. If we get 5 waves down, then we really need to start looking at this scenario here. And we are seeing markets like the FTSE, for example, and we'll look at that as well. Now, when we look at the FTSE, this move up here is very weak and hasn't moved up as far as this market has, and is also showing much more weakness here as well. So this A, B and C here for a larger correction is certainly not out of the picture yet, because we don't have 5 waves up here. We can squeeze it and make it fit, but realistically, we just really need to be careful in this space here. But let's go in and have a look at it in terms of being a corrective wave 4 in here, but not forgetting that it can be a wave B here as well. We just need to see if this is going to get out of hand, as I mentioned, down for 1, back for 2, 3, 4 and 5 coming in through here, because if we get 5 waves here, as I mentioned, we'll get a counter trend and then another 5, and that would certainly wipe out this as wave 4 and bring in this as wave B here. The only other thing that it could be is that all of this is up for wave 1, and then we see a larger ABC here back before we see further upside. But I can't go there yet because it doesn't kind of look right across other markets just yet. So we're in a situation where we just really need to be careful. But this particular wave 4 here, just on the 2-hour chart, starts to open up as a nice A wave and B wave in C wave. Now, in some markets, hasn't been the high. This has been the high, like the AEX has been like that. But I think that we should line them all up with this particular high here on the DAX, and the CAC is the same. This is the high here. So generally speaking, this is the high that we'll be working from. But yeah, as you can see, wave C here, that always has 5 waves in it, and we can see we've got 1, 2, 3, 4, 5 here already. So just drilling into that on the 15-minute chart from wave B down here, we've got wave B, we've got 1 and 2 and 1 and 2 and 3 and 4 and 5 to here for wave 3, ABC for wave 4, and then 1 and 2 and 3 and 4 and 5 here. So we could actually be finished here, but I'm not even seeing an impulse wave here. I'm seeing a corrective wave here, and then I'm also looking at sort of, well, this can certainly shaping up to be a 5-wave structure here. So I'm very uncertain about this low here, but I could say that if you got support on 5, 7, say 30, top of subgroup 1, then you could look to trade long from that point. That would be the first inkling to the upside. But also be mindful as well is that this here can be an A wave, a B wave, and a C wave in 5 waves to the wave 4 of 1 lesser degree, and then down here again, because then this one here, if I can just copy that text, not that one, or this green one here, still got that one. I mean, this, if this was going to be anything, then this if it fails here, then this would be the other wave 4 that we're looking for, and then we would have to label this one here wave 3 here. I know that's a little bit sort of complicated, but so really, you know, until we've got this wave 4 here as support over here, then there's still risk in the game here. Do you know? So 10.8 would be the real catalyst and the change in trend as such here. So, you know, when I look at this on a 5-minute chart here, for example, this little move up through here, you can see that it's basically in 3 waves here, and then we're getting this 5-wave structure down through here in terms of 1, 2, 3, 4, and 5 here. And then all of this is being a 3rd wave here, and a 4th and a 5th here. So it's still in bearish mode here until sort of proven otherwise, and as I mentioned, 10.8 would be evidence of that, but we should be able to pick up the thread a little bit earlier than that as well there, you know. So when we come to, say, the French market, for example, you know, it's the same as the DAX. We've got the A, the B, and then a nice sort of 5 waves down here. But once again, I can see that it's not quite finished here yet either. So we do need another session just to see what we've got here as it stands. And the AEX, the same as well here. So starting with the daily chart here. So I'm fully aware that, you know, the move... The move up here, you know, can also be this wave B here, which would be this wave B here, basically, you know. So we can just sort of move that over to here. We just need to see what occurs here in more detail. I mean, we'll stay with the wave 4 for the time being, but be mindful that this is looming here as well, okay? And that will just open up a larger move to the downside here in 5 waves here. But we don't have 5 waves down from the top. As soon as we get 5 waves down from the top, then we know that we're going to get another 5, you know? So if we get 5 waves down to here, then we know we're going to get a 3-wave counter trend, and then another 5 here of the same length. Now, you know, that really starts to make it sort of, you know, be a larger 5 waves down here for that wave C here. It may not be the case, but we certainly need to keep it on the table and until sort of proven otherwise. But moving in here as such would treat it the same as the DAX here, and looking for a wave 4 into the 450 area here. Of course, it needs to be... let's go straight to the 15-minute chart here. Yeah, look, from, you know, the A wave, the B wave, we just got to make sure this is not wave 3 here. If this is a wave 3 and then we get a wave 4, an A and a B and a C for wave 4, pulling back to the wave 4 of 1 lesser degree, and then moving down here, then we've got a more of a bearish picture in tow. And this is not so silly as I've mentioned before, because when we look at the UK market, the FTSE here, just on the daily chart here, you can see straight away that this is much more bearish here, isn't it? You know, it first of all, it didn't move up here as much as the other markets have done. And secondly, it's also moved down here quite radically as well. So it's actually moved down past the 61.8% mark here, say from this low here to this high here. That's it there. So it's basically moving through that 61.8% mark here, you know, that puts it into a real weak spot. And you know, at the end of the day, you know, if you know, even if that, you know, if that's, it just doesn't fit. You know, it fits much better like this here, and yeah, much more bearish picture sort of emerging here, which would be sort of in line with the Australian markets as well. The Asian markets doing much the same as this. So yeah, let's just sort of see how we go here. But this is, the FTSE is one of the weakest, and it's certainly a catalyst for further downside. And most of our equity trades in US, UK and Australia are certainly well on the short side, you know, heavily on the short side. And if this FTSE leads us down here, then you know, we're gonna see, you know, a larger leg. We want to see a larger leg come down. So this will basically be down 1 and 2 and 3 and 4 and 5 for wave 1, back for wave 2, 3, 4 and 5. So a bigger picture can certainly unfold here. And yeah, all good. All right, that's that, I think. Okay, cheers.